In a new note, Morgan Stanley's Mike Wilson says he finds it hard to get on board with the excitement around the market. Wilson argues that fading fiscal support, lower liquidity, and slowing inflation will weigh on the rally in the months to come. He says stock bulls could be in for a rude awakening. Joining me now to weigh in is Steve Sosnick, Interactive Brokers Chief Strategist. He's going to be hanging with us for a bit here. Mike Wilson has been bearish for a while here. Yep. In this latest note, he sort of apparently questions whether his assumptions have been wrong and then says, no, they have not. And in fact, profits are going to decline this year. But then I mentioned also that Citigroup note where it says that positioning is bullish here for stocks. Yep. So how should investors be framing what we've been seeing recently?
This is almost sort of, a hold your nose moment, because if you are, in Mike Wilson's camp, and I do understand his logic, we are still in a monetary tightening environment, and we are not seeing any help from the fiscal side. That in general is not great for equities. But I've been calling this the inertia market, and it's basically a body in motion tends to stay in motion until acted upon by an outside force.
Whichever way it's going.
Exactly. And right now, the inertia is up, and the Fed could have been a force that could have toppled the rally a little bit. At least in the short term, it has not. I use the term inertia as opposed to momentum. Momentum sounds better. Do you want to be running an inertia fund, or would you rather be running a momentum fund? But that's really what it is right now it's just got the trend, the rally has a life of its own, almost regardless, and so that makes it a very difficult environment to analyze, because you do have to worry about things like positioning as much as you do about the big macro factors.
Well, and to the point of the flows note from Citigroup, look, you obviously have a front row seat to a lot of flows,
Yes.
Right? So what are you seeing on that front?
We're seeing customers continuing to buy into the AI enthusiasm. The most active stocks on our platform continue to be the ones you'd expect them to be. Tesla, AMD, Nvidia. Nvidia actually crept ahead of Tesla for a brief period there during the height of Nvidia's parabolic move. But they continue to be net buyers. They are a little more tactical. I think our customers tend to be a bit more trading oriented. But the names that are at the top of the list are the names you would expect, along with things like TQQQ and hyper levered stuff.
So let's take it then to the Fed, because obviously we're going to hear from Chair Powell on Wednesday. We're going to hear from other Fed speakers throughout the week, because there are a lot of them, right, that we're throwing into the mix. And so how does the inertia rally exist almost independently from the Fed, which would be weird, but it, I guess it does sort of happen sometimes. It
is weird, and that's what I think makes it so baffling for so many people, and why you get such a wild divergence of opinions. Because, a lot of us have been around long enough to remember the internet craze. The AI enthusiasm borrows a lot from that. And the one thing I would remind people of is the internet was as earth-shattering, even actually probably I'll argue more so, than the wildest predictions even in the late 90s. On the other hand, most of the stocks that would have benefited from it are no longer here. And the ones that did benefit the most didn't exist then. So, Meta, Google, we're not really part of that. We're not part of that process. Amazon is really the only one that's really thrived, and to a certain extent, Microsoft sort of is just, too big to, so big it existed through both. But other than that, there was this big changeover. So right now, Nvidia seems to be the king. Who knows if that's the case? And so that's really the AI issue.
So in other words, what you're saying is AI is trumping the Fed right now.
Absolutely. AI and FOMO.
AI and FOMO are trumping the Fed. Is there anything that we could hear from, because as always, there was a lot of critiques of Chair Powell. Is there anything that he says that could get the market's attention anew?
He would need to give a Jackson Hole type of speech, which I realized, the Jackson, and it occurs to me, the Jackson Hole speech was given standing in the prairie talking into a camera. When he gets in a room with people, I think he's just innately a decent guy, and so he doesn't want to be as confrontational when he has the moments with the press. And speaking of confrontational, he'll be in a much more confrontational environment this week
with Congress,
with the champion bloviators, in the questions. But I think it's his nature to be somewhat conciliatory. So he the Fed gave a tough statement. He started out tough, and then every little time, for example, July being a live meeting, that to me means they're actively considering rate hikes. And I think that's what he wanted to portray. I think what the market heard was, oh, wait, there's a chance they're not going to do anything. So, it's a whole combination of glass half full, and he leaves the door open for the glass half full all the time. And that's not a criticism. It's just him. I've called him Goldilocks in a suit, and that's really, I think, applies.
Yeah, that's a funny way to describe it. But yes, it's true. He sort of couches a lot of his language.